If you want to make money in the market, you just need to wait for the signal from the candlestick confirmation. Welcome to the Trading Focus once again. Hope everyone is doing good. In today's lesson, we are going to show you what you need to wait for before entering the market with the candlestick confirmation. That sounds great, guys. Subscribe on the channel, like the video, leave the comment below, and we see in a minute on today's video. Okay, welcome back. So the candlesticks gives us information. What are we expecting for the next movement of the market? So when the price is moving up, so you know that if we have a candlestick that is open from the low to the high, that is when the buyers are controlling the market. Okay, so when we have the candlestick that is open from the high to the low, also again, that is when the sellers are now controlling the market. On the buyers, this will be a bullish candle, and from the seller, this is a bearish candle. So then in price action, with the formation of the candlestick, we get the confirmation on where to enter the market and even where can we exit the market when we are already in the market. So what you have to do, what we are seeing here is that the market is moving up. So we had made a high to the higher low. We are expecting the continuation of the upside from this area to continue with the higher high. Okay, what we are going to talk about is the formation of the candlestick that is giving us the sign that we continue in that direction of the uptrend, if we are in the uptrend, or the candlestick sign is going to change the direction to the downside. So now, if we have this candle, let's say we entered from this candle by taking a buy. If we took a buy from the confirmation from this hammer candle, so then what happened is that we are expecting the market to continue with the higher high. So then with that continuation, we need to make sure that we are standing well with the candlesticks. The formation of the candlestick that we need to talk about will be the next candle after this candlestick. Have to be bullish. If we open from this area, we are anticipating the market to continue in the uptrend. Okay, so now we need the candle to continue by creating higher highs. By creating higher highs, we need to start breaking above this area so that we can even close above that area. So we have to break above the previous high. This is the previous high. Break and close above this previous high, depending on the time frame that you're entering from. So then when we break above this area, and after that we close above that area, that's where we are going to be confirming that there is a high probability for the market to continue moving up. Even the next candles are going to be bullish. Okay, that's what we need to see in the market. So the problem comes when we want to enter the market and we are expecting the market will continue in the upside. Then maybe someone will be waiting to buy above this area. If you are trading breakout, you understand this. You want to enter when we start breaking above this area, anticipating the market to continue in the uptrend. The stop loss will be below the previous low of this candlestick. This one, that is the stop loss. So if you have a stop loss below this area, that means you are anticipating the market to continue moving up. So the confirmation you need is the candlestick to break and close above this area. If we don't break and close above this area, that is a sign that we are rejecting from this area, because even before the market tried to move up from here, then we rejected also from this area, and we know that the history repeat itself in the market. So as we rejected before this area, we are also expecting again the history to repeat itself. To confirm that we can continue up is for this candle break and close above this area. Now we have to wait until that candle breaks and close above this area. Okay, so when you jump in the market, when you see this candlestick breaking above this area, we are in the 4-hour time frame. You have to wait for the 4-hour candlestick to close, which means has to be 4 hours, or if you are from 30 minutes, you have to wait for the 30 minutes for this candlestick to close. If you enter before candle to close, what will happen? You can enter from this area. When we break above this area, starting breaking above this area, you enter from there, the candlestick rejects from that area, making a fake out from that area. Then after that, we close below this area. So what happened? This is a sign that even if we try to break out from this area, the sellers are trying now to push the market down. This is a selling pressure. So what will happen from here is that you didn't wait for the candlestick to close above this area so that you can continue upside. Then when we close below this area, there are very high probability for the market to change the direction to the downside. That's where you see most of the times the candlestick closed like this, the next candle open and start breaking below the previous low, where there is a high probability that you are going to lose from this trade. The market moved down like this time from your entry. If you are lucky, from this area the market will move down, close from where you entered from, or even break below your stop loss, and then after that you will get a buying pressure. Okay, you will get a buying pressure, but you are no longer in the market. So that's where you get another chance for the next candle from this area, where you can also buy from. You got another candlestick from this area, then you enter for that from there, anticipating an uptrend continuation, and this time the next candle break and close above this area. That is a sign we are going to continue in the upside, or that is a very strong signal that the market will potentially continue in the upside. So when you see this, someone who enter with breakout strategy will be entering from this area, the stop loss below the previous low of this candle, anticipating the market to even continue in the upside. This is where you are going to enter from, by expecting the market to continue for the higher highs. Someone who trades breakout, we understand this. And even someone who doesn't trade breakout, we also understand, as long as you stay in the market and you see the candlestick rejecting from this area, there is a high probability that you can get kicked out from the trade, and then the market will continue in your direction. Or when you see this candle, this is a sign that the buyers are losing momentum. If you are in the profit, you have to close from where the candlestick closed from, and then wait for the next opportunity. So then you enter for buy from this area by anticipating the market to continue in the upside. So you can see now, when you have a candlestick that's rejecting from the high or even from the low on the bearish areas, you have to make sure that that candlestick have to break and close above or below that area. So that's how we have to enter in the market, by looking on the candlestick reaction from the areas where we are expecting any kind of rejection. So how the way it happened before, rejecting from this area, there is a high probability for the next also move to be repeating the action again. So that's why we need the candlestick break and close above this area, anticipate the market that is continue with the higher high. So let's take an example from the chart and see how can we deal with this candlestick to make sure that you are not closing the loss, or we are going to close when we see that candlestick is reacting different from what we are expecting in the market. Okay, from this example, we have these candlesticks that the market is confirming that we are going in the upside. So then we have this area where we are reacting from as an uptrend continuation or a reversal. So then what happened here, when we enter from this area, we enter for buy from this area, we are anticipating the market to continue in the upside. Then which areas are we targeting? So the target will be from these areas, this area, we have this area, and we also have at least this area. Let's take a look from those areas, and the last target will be from here. So this is our target. So we are buying from this area. Remember, we need the candlestick to continue moving up and breaks these areas as we are also staying above those areas. Every area that where we are anticipating any kind of rejection, we have to make sure that that candlestick is not losing momentum from the high. We need the candlestick that breaks and close above this area, especially this one. So as long as we stay above this area, this will be an opportunity for an uptrend continuation until we get to this target. So let's see what happened. Okay, ejecting from that area, can we continue moving up? Remember, this is a special area that we are looking for. Okay, so the first one, we broke it above. Can we break above this area? If we break and stay above this area, we are going to be expecting the market to continue in the upside. So that's why we need that candlestick, because before we rejected from this area multiple times. You have this one, and we have also this one from downside. Okay, so then let's see what happened. So this is what happened. We moved up, then we rejected from this area and we closed bearish. So top of this candle has a long shadow from the high, which is a sign of what? Of a selling pressure from the high. And even the candlestick which opened as a bullish candle, when it was moving up, it was a bullish candle. Then when we started moving down, we also broke our previous open of the candle, which changed the color of the bearish, so that this is a sign that the market is going to go down. I have to leave the market immediately. If you are waiting from this area, sometimes you are wasting your time, because this is a sign that if the market continue moving up, down, it will indicated before that you are going to change the direction. So even this area is stronger, as rejected from this area before, also rejected from there. So this is a sign that there is a weakness from the buyers from this area. So we have to leave the market immediately. Let's see what happened. Okay, from that area, continue, then we are still failing to break above this area. Then we move down, and this time I think this is a sign that we are continuing moving down. You can see from our stop loss, we are so close to hit it. So let's see what happened. We also stayed below this area. We didn't even break also this time and stay above this area, then which is a sign that the market is going to change the direction to the downside. Let's see. Then we got this candlestick that's rejecting from the high, which is bearish also again. This is a sign that we are continue moving down. So let's see what happened. You see, what happened is what I was talking about. As long as you enter from the candlestick and you see, and when you have we have those areas which are stronger, which has been rejected multiple times, you have to be careful and wait for the candlestick to break and stay above or below that area, so that you're going to get a confidence from there that the market is going to continue in your direction. So that's how you have to be careful with those candlesticks. Okay, taking another example from here, we have the market that was moving down as a downtrend continuation. So we are rejecting from the high, which is a sign of a bearish continuation. So if we had to enter from this area, this will be an entry. Okay, taking a sell from this area, anticipating the market to continue downside. What we have to focus on is the market that we need the candlesticks to break and stay below this area, and even break and stay below this area. So if it doesn't happen, we are going to leave the market immediately, because that will be a sign that the bears are now losing momentum. Let's see what happened. So start consolidating from that area. We got a candlestick which is bearish, open from this area as a bullish candle. We have the candlestick which is bearish, but rejected from the low. We failed to break and close below this area. This is a sign that the sellers are losing energy from the downside. The buyers need to control the market. Let's see what happened. Okay, also rejected from the downside again. This sign will give you an opportunity to leave the market. Can we break below this area? If you still waiting, okay, we are still rejecting from this area, and even we got this candlestick rejected and closed above this area with the body, but left a wick from the downside. You got an opportunity to close from this area. You stayed in with the expectation that the market is going to continue moving down, but this time you need to leave the market, as we are stiff to break and close below these areas. So you can see what happened. The market changed the direction and moving up. That's why you have to wait for the candlestick to break that area and stay below that area. That's what we need to see in the market. So, guy, that is a reaction of the candlestick, indicating that you can leave the market, or you have to wait from those areas to break and close above or below those areas, so that you can get a confidence that you are going to continue with the lower lows when you are in the downtrend, or with the higher highs when you are in the uptrend. So be careful with the candlesticks formations when they are changing the shape. Okay, thank you so much for your time. Remember to subscribe on the channel, leave the comment below, and I will see you next time in the next video. Ciao.